We trying to enjoy our best life, not struggle every day, not barely make it through. That's why me and Larry Jr. do what we do.
But every bank has a book of business that they have to fill throughout the day. So this is what you guys see. They may have a total of 10,000 orders. One seller may have put 40,000. He didn't care what price point or where he wanted to sell it. He just needed to buy this business. He was let's say an investor in Europe that needed to buy an asset in Japan. He didn't care about the value. Currently, he just wanted to make the transaction so he can get the deal done. He needed to sell, let's say, 40 million worth of whatever currency. Then they have a book that they need to fill throughout the day, throughout their session. So that's what's driving price. Typically, you can get the books changeovers from session to session. So I think we kind of covered it. I'm going to show just a brief example yesterday of, price usually doesn't trend over two sessions in one direction. Each bank has their own kind of itinerary, or they have their bank. So I won't go too deep in that, but then we start looking at them. They actually have to balance the book. So at certain times, like you may notice at about 4 o'clock, 5 o'clock in the morning, if you trade London session, you'll notice that reversal. Well, that reversal is due to the bank having to balance out their book. So what they do is they'll run their program or their buying or selling program. They call them programs, whether it's going to be with a algo or algorithmic trading bot, or if somebody's in there doing discretionary manual trading, they're going to be running their program. At a certain point, they have to balance their book because it's regulated by the central banks. They have to have a certain amount of surplus, certain amount of dollars, certain amount of yen, certain amount of, so that's why you usually see that knee jerk or the reversal, because they're buying back whatever they sold. So anyway, let's go back here and we'll finish up with supply and demand. We'll look at some real world examples on the chart. So how to find supply and demand. We'll go halfway through this because we'll jump on the charts. Two steps in order to identify supply and demand zones. Look at the chart and try to spot successive large successive candles. It's important that price moves a lot, established base. So we're going to dive into what is a base, rally, and a drop. So there's different supply and demand zone patterns. Some of the more popular ones are shown below. You have a rally, base, rally. You have a down base, or I say drop, base, drop. You have that's for continuations. Then you also have a reversal base, which is rally, base, drop. Or you have a drop, base, rally. And then you have a flip zone, which some may know as supply turning or resistance turning into support. So see some examples. You got the drop, base, drop, pullback for the entry off of that supply zone, or distribution. A little bit of volume examples, what to expect from volume. During consolidation, we see low volume. There's a few examples of the trend reversal.
I think you answered it about as far as like, as long as someone's willing to buy at those prices, and then it can still go up or down depending on the direction.
Sure. So just kind of how I always say, you can get a reading from indicators like stochastics, MACD, but we do see where we see periods to where they just range over. That could be in these zones. We can see, and we can start structuring out the pattern to see whether if it's going to be accumulation or redistribution. So an example would be, let me see if I can get my chart back big. So I started noticing, price. Let's break down the supply. So this didn't give us a textbook, but we can see that it was overextended. Generally, that is a sell, but we're seeing the basing. So we're wondering if it's gonna go higher or lower. Safest bet is to just wait for the break in a retest. Also, you do want to
For
take.
me, it's like
Jump in, tap in. Not tap in.
Oh no, I was saying because I remember you asking earlier, like taking any trades, but most of the markets I've been looking at, like all the ones that I have my eye on, are like still in this range area on like all time frames. Besides that one little drop that we had with SPX 500, everything kind of still seems to be like in this range, like this range market. Just doesn't, for me personally, it just doesn't feel like move yet.
I'm seeing some of the similar things, bro, and a lot of other people in the markets are as well. It's a difficult time, so I'm trying to see the best way to put this. As you develop your skill set, sometimes these markets become a little tougher because some of the moves you would have did as a novice, they're not as attractive as they once were as you get a little bit more knowledge. So even with the stock market, it's hard to find a place to buy. We all know that they're pretty much buying the market. So our analysis, our not our analysis, but our bias would be maybe to the upside for a bit. Yet there's these knee-jerk reactions, so it makes it difficult finding where would the point of entry be. They call it a refraction zone, but the point of entry would be something like this pullback in with these current market environment is kind of hard to find those areas because you have these highs that's being rejected. So when we break down this chart, we see so this isn't a supply and demand zone. This is kind of top here. But we start seeing the shift. When we look here, we see the basing. And this range for a while. So for me, this is starting to look like a actual distribution zone. And price can come back into this zone. If we start looking at Wyckoff, you'll see some different models of where it pulls back up. But we notice it just came back up and pretty much tapped the previous supply zone. So we came up there. Now we're going to be looking down. So this is building more context that I should be bearish in this next zone of trying to determine whether it's going to be accumulation or a accumulation higher, leg higher, or a distribution lower. You don't want to imprint your own beliefs. So price will tell you. So if you wanted to be more cautious, you can wait for price to break, pull up, but just recognize until it really breaks above this previous supply zone, it can come up here and just retest again and fail. Now we are on the daily, so that comes where your chart work, where you always read top down. Are you working in between time frames? So for this daily setup, say I get a move up on an hour chart, that could be a quick 50, 40 pips, but I'm just recognizing that I'm about to hit this zone. So for one trader, the buy would have been good. For someone that's more trying to look at a different type of play, or however they're reading or perceiving the market, that buy, they notice that the buy could run into her and fail. But for an hour or somebody that's on a smaller time frame, they just took their little buy as a break and retest. So it depends. Like I always say, the higher time frames keeps you out of it keeps you pretty safe, because when we're on the hour, the trend may look strong. The trend is going to look very strong on this hour chart, but zooming out and having a more bird's eye view will let you know that when it got here, if it did reject, I can't say it will reject, but if it did reject, you can understand why the price action, tell you the story of, okay, it's back at the supply zone. So me coming into this chart fresh or brand new, building up that context of the analysis, I'm looking short. I'm saying, okay, well, yeah, we do have all this bullishness for the past few weeks, but now we're back at it. We're back into where we distributed from, and we tap the supply zone, I can also figure that this may be, or look at this as a distribution phase or a Wyckoff phase, because you have kind of a spring here. Price came back and retest. You get the initial breakdown, and then you get a pullback, and then we'll look for a new low. Or another scope, we just start looking at the higher highs, higher lows. So you get the high, lower high, higher low. Excuse my sequencing if I'm saying this wrong. We're looking for a lower low. Now